Hi, my name is Patricia DeFonte. I'm the founder of Fonte Law, where we practice estate planning with heart. Multidisciplinary study is a value at my firm. I firmly believe that if you are your client's only advisor, you are a hack. Today, we are doing some education for my team, and we invited a whole bunch of great colleagues to join us. Our guest today is Janice Nugent. Janice Nugent is a mortgage specialist, and she has a very, very specific niche in working with clients who are getting a divorce. Do not agree as to what is going to happen with that house until you understand what the banks are going to allow you what to do when it comes to that house.
In my mortgage planning business, I make sure that each one of my clients get introduced to all the financial people that are important to them. So I create a mortgage planning team around all of them. That includes obviously a real estate agent, an estate planning attorney, a financial advisor, tax person, sometimes a property manager. The goal for me in learning more about divorce was that I learned very early on how there was just really no education and guidance for people going through divorce, especially what the heck to do with their mortgage. It was just incredibly sad that there was nothing out there. So I became very aware of what was needed. I joined to become a certified divorce lending professional. And since then, it's just been added to my business. My first divorce client I helped was probably 20 years ago and one of my best friends. I basically had to pull her up. She was a big puddle every day for months and months and months. So for me, it was just incredibly important to learn all this. And I'd love to share this with you. So one of the things that's really important about divorce mortgage planning is we interact with most of you on the call. Take a look at that Venn diagram and you can see how not only mortgage planning, but everything encompasses what a client needs, right? We don't know all of these roles, but it's certainly in our best interest to create deep, solid professional relationships so that our clients can be introduced to create a divorce team together. To me, this diagram just really shows how our roles intersect. One of the things that I think is incredibly important is, we all know this, right? Divorce settlements don't fail in court, but once they get kicked to real life, that's when kind of the crap hits the fan, right? My goal is to work on this system so that we can identify all of those risks way before final judgment. We can solve a lot of problems and take away a lot of headaches if we do things well in advance, right? That's the goal here. And let's talk a little bit about why this matters, right? One of the things I want to focus on is, how I separate myself from a traditional mortgage originator. My role is as a consultant. This is separate from my mortgage business. This is just my divorce mortgage planning is consultative. I use a system called the mortgage capacity mapping. And this is just a real analytical foundation for my clients. It allows me to evaluate my clients' mortgage eligibility across every stage of the divorce. This starts with the period well before the settlement, before the ink is dry, before anything's drafted. We are there during negotiation and we are there after the final decree is entered. And as a CDLP, this is not providing pre-qualification or quoting rates. It's analyzing how divorce-related changes in income, debt, property, vesting timelines, and all the legal structures affect a client's present and future mortgage capacity. And this is work that normal loan officers are just not trained or certified to do. So I integrate 4 analytical phases that's included in my process. That I also include a divorce mortgage planning report, and we'll talk a little bit about that. Let's go through some things that I want to highlight. My mortgage capacity mapping program, it's a system that we use. It is specifically for divorce analysis. Divorce isn't static, right? It's a dynamic transition. This reshapes a client's financial life and entire life and family forever. If you consider all during this, there's income changes, there's jet shifts, there's title changes, support begins or it ends, or it gets completely screwed up. There's property disposition. It all has to be restructured, and the timing of each change affects the mortgage capacity and the eligibility of my clients. So we want to make sure that this is a sound process for them. If you think about it, you've got attorneys, mediators, financial experts. They all need a clear, reliable way to understand, the settlement terms and how it affects my client's ability to either to get a refinance, apply for an assumption, or even purchase a new home. And hey, this may take a client to, maybe they have to rent for another 12 months because of what's going on and the timing any of this, but my responsibility in all this is incredibly important. This can shape the legal decisions and the lending feasibility. It requires a structured approach and an analytical methodology that just doesn't exist in traditional lending. You're not going to find this in a traditional lending process. So let's talk a little bit about the mortgage capacity mapping. It's structured to examine every financial and legal change that occurs during the divorce and after the divorce. What's important here is to know that well in advance, if the terms being negotiated, can they be executed under the current mortgage guidelines? Do we have the right timeline involved? Is this realistic to achieve? Can we identify all the risk very early on in the process? That's what's really critical. Let's talk a little bit about property feasibility. There's 4 phases of my mapping, right? And this is how I evaluate each case. And it's just a really high strategic level. First, what we go over is the property. Is keeping the property, selling the property, or transferring the home or rental property even possible under current guidelines? That's what's critical. We do this stuff well early on before, like I said, the ink is dry. And then let's talk about income. Can support timelines or changes of income or even employment, or maybe if you even have self-employment, that's adding some complexity into your qualification. And we want to use all of this information well in advance so that we have a very sustainable settlement for you guys. Let's talk about debt, right? We've got marital versus individual obligations. Think about this. How do maybe equalization payments or overall impact of debt affect even loan approval? If there's too much debt and nobody can do anything, where do we go when the divorce is final, right? We also focus a great deal on the structure of the equity that's in the home, the cash flow. What do we need to achieve to get the final outcome? And it's all based on our lending rules. And for a client, why the hell fight to the death for something they can't afford, right? Why not know this well in advance instead of arm wrestling constantly after the divorce is final where you just have a big headache, right? This is some of the, basically the system that we use. And I hope you can start to understand how we move through, right, a predictable, emotional, logistical journey. And then our goal is to reach stability post-decree, right? That is just so incredibly important. I have done this for many, many years. I built my business 100% on referral business for the people I care about. They all introduce me to their next friend going through divorce. It's something that is referral related for sure. Like I said, you're not going to find this in a traditional mortgage, right? If you've got a traditional loan officer on this handling it post-divorce, you're probably in a failure to launch, if you consider that, right? One of the things that we do when we have our 4 phases of our mapping together is we put together a divorce mortgage planning report. So if you think about this, it's a professional report. It consists of all the information. It protects the settlement feasibility. It really is just a one way for not only the client, but for all of the divorce professionals involved to really understand. It's a formal deliverable that reflects my full analysis. And it's a structured professional document that attorneys, mediators, financial professionals, they can all rely on to not only draft, but review settlement terms. And the big thing is it allows for the legal team to see the client's mortgage capacity from every angle, not only now, but in the future, right? The purpose of this is to really protect the feasibility of our settlement. Like I said, many settlements fail because they're not legal issues. They fail because the financial structure just can't be supported under the guidelines, right? Under your lending guidelines. So the DMPR, it just prevents all that. It's not a loan estimate. It's not a pre-approval, but it's a strategic planning tool created specifically for the divorce environment. It's something that's incredibly valuable. Think about what that would mean for your clients if they've got everything up front before their settlement is completed. Think about how clear those expectations are. Think about how much fewer last minute changes or financial shock clients are going to have. Think about how smooth that transaction can be. This is something that I use with every client. I use it consistently. The family law attorneys, the financial advisors, the CDFAs, the estate planning attorneys that work with me really get to understand the value of the analysis that I provide and the report support that I provide, because everybody's on the same page and we are together creating that team that's in best interest for the client. I just think the value with it is incredible. This is what makes me different, right? This is what makes my certification so incredibly different, right? So you have your mortgage capacity mapping system. You have the analysis, right? That analysis starts before, we're there during, and we're there post-settlement. And then we have that mortgage planning report that is really just an incredible way for, a client and their team to see everything in one document. They know what kind of issues they have to fight for. They know what they can put their two legs on to stand up for in court and to fight for. But think about this, how many times you hear about a client spending weeks or months fighting over something. Maybe they're fighting for this house because they're emotionally attached to it, but deep down they can't afford it. Let me share with you a recent story of a client that I had. I was brought in pretty late to the story. Settlement was already completed. The divorcing wife really wanted to keep the house for her and kids. The divorcing husband had no problem with all that. He was supportive of it. The wife wanted to assume the mortgage. Think about this, right? They had a 2 or 3% mortgage, right? Why not try to assume it? It took 9 months for the ex-wife to try to get an answer of whether she could even assume the mortgage. Now, here's the problem, and here's what I found out on day one. The mortgage was a VA loan. The husband was on it. The wife was not. There was no way that the VA was ever going to allow her to assume that mortgage. She wasn't a vet. Didn't matter that she was a wife of a vet in a divorce. They're not going to let her keep that house. So it took them 9 months of arguing and going back and forth and costing so much in just peace of mind. Day one, I said, you're not going to be able to assume the mortgage. And then we asked the opposing counsel to give me all of the income documentation for the ex-wife. And then we realized she wasn't even going to qualify to refinance the house. So I actually came up with a structure for her to be able to do it. She had to get gift funds from her family. She had to pay off all her debt. Within a week, we had a settlement that we could do. Within 2 weeks, the woman was able to finally refinance, and they were finally able to move forward. If you could just think about the timeline of what that would have, timeline and trust and just common sense and being able to sleep at night, knowing those 9 months was just wasted. Think about that for maybe your clients. And if this report and the system that I provide could provide meaning and structure to not only you and the people on your team, as well as your clients, think about just the time that we would spend on things that are incredibly important that we actually could do. I'm sure you've all had clients that really wanted to keep that house, and then you find out at the end they couldn't afford to for one reason or another. Or, lender guidelines, when we talk about child support and how many months we have to show child support and how it could never change, not even for a penny. Otherwise, you have to start over in 6 months. Just think about taking care of all of the things that maybe derail a divorce scenario that you guys know about, and how working early on in the process that could really change the whole guidance of the outcome. So, Patricia, I just want to thank you so much for this opportunity. I am grateful for you. I'm grateful that we have collaborated so much, especially improvisers. I appreciate you inviting me to learn a little bit more about your business and the people that are on your team, as well as the professionals here that you certainly care about. I want to share one quick thing with you guys, because this is something pretty exciting in my world. Melissa and I have just created a book, and we're just about ready to get it to be printed. So what we've done is we've put together a book on how we've helped women and really make them feel confident, informed, and teaching them about housing decisions. One of the things that I have found, unfortunately, is I would say 90% of the people that I help, the women that I help, they come to me with shame. They come to me and embarrassed. They come to me because they don't know their finances, because they've allowed their spouses or their significant others to handle all that. I hear all the time, I'm not good with money, or I don't know, my husband has people to do that. Consider after divorce how that whole, not only is the family just torn apart, part, but so is, the ability to trust people to handle your finances. So there's so many women that just need that guiding hand, right? Maybe we just have to start with budgeting 101 and teach them, the importance of finances. But this is some of the things that I'm very, very proud of. And it's really something that is incredibly, just really special for me to now complete. I've been working on this since March of last year. It's incredibly fun to announce. And I'm looking forward to, sharing a copy with you guys if you'd like. Here is my info. I know some of you on the call today have reached out to me already. Thank you for doing that, for reaching out to me on LinkedIn. Here's all my contact information. If there's anything you need, if you just want to have a conversation, want to talk about, just get advice from your clients, I'm right here to help you. Absolutely. Feel free to connect with me and use the knowledge. Consider me as a resource for you.